Hey everybody, Jake here with Jake Woo Market Research to go over the weekend update into the last week of April, and a very boring week here, especially if you're a swing trader. Scalping probably had some decent opportunities along the week, but overall pretty much a wash for the week. Now before we jump into the charts, I did want to go over a couple housekeeping items. First one is really want to thank everybody for the support and all of the great and kind comments over the last week and a half on these videos that I've already put out. Hopefully the content is helpful, and if you do enjoy the content both on the educational side and the market update side, please like and subscribe. Really appreciate your support. Second one is I had a couple comments about the background being a little bright, and unfortunately this is just the color for me that works best and the way I can see the markets best and the candles and all of that. If this is too bright, consider just lowering your brightness on the screen a little bit, and that should help quite a bit. So that's about all. I'm going to go over not only market updates, but go over some questions that I had last week about how to add the volume profile, how to add the anchored VWAP, and a couple other things as well. So let's dive right into it. Starting with SPY, we'll go over the daily chart and then the weekly chart. Starting with the daily chart, you can see here that we still are at this SR flip. Essentially, that means that this previous resistance zone has flipped to support over the last week or so. And you can see here that over the last couple of days, we have tested the top of that zone and have bounced so far. So you can almost use this trend zone as your status quo zone. So if price breaks and closes on the daily chart below the bottom of this zone, then the bull thesis is invalidated. But for now, the SR flip is in play, and your target would be this gap above at 421.22 from months ago. Now, if we do break and close below this zone, remember, when you are using a diagonal zone, these invalidation levels change, right? So if the price broke and closed right below this area here on Monday, that's right around 407.77. Now, let's say that it takes maybe a week to break down. So we move this over. Then all of a sudden we're down here. And notice that is right around 407.15. So it's not going to be a huge difference depending on the slope of the line. The steeper the slope, the more that's going to change as you go day by day. But just remember that if you are looking at invalidation zones on a diagonal zone, that is going to change each day as the slope changes with time. And creates these different prices. So when you're using a horizontal level or a gap, those stay static, but when you are using these diagonal zones, those will change. So for example, let's just use the arrow in case you didn't get that first part. So this would be your invalidation zone on Monday, a close below, like we said, right around 407.77. If it takes a few days, and let's say it takes this long and we finally break here, then your invalidation zone is down here at 406.75. So just kind of look at this arrow and look at, as we move on, this arrow is getting lower and lower with these prices as the slope and of this diagonal zone changes. So upside gap is 421.22. If we do close below it, you have some very small gaps. You almost have to squint to see them. 404.35 is the first one that will fill below. 401.60 is the next one that will fill below. And to add to the bear case here, we do have the MACD definitely starting to lose some momentum. A quick kind of educational thing here. I don't use the histogram because if you understand what the histogram is, you really don't need it, right? So as this blue line, the MACD, gets closer to the signal line, the difference between these two lines changes, right? The difference, the delta is smaller. So that's all the histogram is showing. So that's why these little bars are getting smaller and smaller, because that is essentially just the distance between these two lines. So the histogram is great for those that are learning the MACD, but as you start to understand how the MACD works, you really don't need the histogram, because you know as this blue line is getting closer or further away from the signal line, the yellow line, that's really all the histogram is. So that's why I don't use the histogram. I had a question on that. And you can just tell that the MACD is starting to converge with the signal line to the downside. Last time we had a MACD cross to the downside, we did have a pretty decent move down. So something to consider with this current MACD starting to curl to the downside as well, losing momentum. Now on the daily, or excuse me, on the weekly chart, you can see here that volume is definitely still supporting price here, shown by this orange volume shelf. Remember, whenever we have price right at or a little below the point of control, I change that volume shelf color to orange, kind of for caution, or yellow. I didn't make it yellow because we already have a yellow gap fill here. And you can see here that gap fill that we talked about on the daily chart is way back from August. So that would be a huge fill to the upside, especially because it's a weekly gap. You can see this gap on the weekly candle as well. So you essentially had a gap down into that next Monday and it never filled, and that's why you have that gap on the weekly chart. But still, volume is supporting price here. You can see that if we do break down, let's say right around 410, we are going to be entering this this volume gap. There's not a lot of liquidity from around 409.50, let's call it, all the way down to around 399. So if we do break down and we start to accelerate, there's not a lot of friction keeping price from moving quickly through this volume gap below. A volume gap is different from a price gap. A volume gap is not a difference between prices and the wicks of the candles like a price gap is. A volume gap is really just an area where you don't have a lot of volume that has occurred, creating almost a vacuum for price. So that is SPY. Let's move on to the Qs. And you'll see here that the SR flip here still stands. You can see that this previous resistance is now acting as support. We're going to call this essentially your barcode pattern, your piano key pattern. Pretty much absolutely nothing going on here over the last 2 weeks. It's some of the most boring range-bound price action on an index I may have ever seen. And that's something that is being reflected across other tech names as well. What's interesting is you actually already have a MACD cross, and that happened way back in mid-April on the 12th. And so you can see here that the MACD is starting to accelerate. It's starting to move further away from the signal line. And if you throw the histogram on there, you'll see that. You'll see that this histogram bar is getting bigger because the difference between the signal line and the MACD line, the blue line, is getting bigger. And that histogram is essentially just representing the delta between those two lines. So you can see that it's starting to accelerate down. That would definitely be something on the bear case to keep in mind. But remember, same thing that we just talked about on SPY, except we're looking at the horizontal level this time. As long as we hold above this zone, this previous resistance zone now flipping to support, this bull thesis is not going to invalidate unless we get a close right below around 312.35 or so. And if you want the exact price on that, let's just call it 312.30. So if we do close below this area, it's shown the SR flip will invalidate below 312.30. I guess I could have just looked at my my annotation there. And if that's the case, you do have a gap below that fills right here. And that gap is from around 310 all the way down to 308.20. That's where it would fill. So if you do have a daily close below that 312.30, then that gap below would be your target to the downside, and then you reevaluate from there. Now on the weekly chart for the Qs, you can see here that we still do have the anchored VWAP from the all-time highs kind of supporting price here. So this is now the fourth close above the all-time high anchored VWAP. And as we mentioned before, we did close slightly below the point of control. So we are going to change this to yellow for caution. So really, your bear trigger here, on at least on the weekly chart for a bigger move, would be a close below the all-time high anchored VWAP, which it shows right here on the y-axis, right around 315.98. So that is what you'd be looking for. Now, if we do get a move to the upside, we have a volume gap above. There's not a lot of volume supporting price up here, kind of creating that vacuum that we just talked about on SPY. And this is where you just use basic horizontal levels. You just use this candle here, and then you'd use, the body here, and then you would also use the wick here. So this kind of creates a zone above. And so that zone is right around 330.3 all the way up to around 334. So you would just use some basic horizontal levels if we do get a break above, and a close above this previous high right around 321 or so. Now let's move on to IWM. IWM is even more boring than the Qs and SPY price action, which is hard to do, but it is doing it. Pretty much since mid-March, we have not really gone anywhere, been very range bound. If you're trying to swing options on IWM, it's a nightmare because you're not moving, premiums are getting burnt up, and just not looking great, at least for anyone who's trying to trade some type of trend. At least the last month, there has been almost zero trend. And you can see here that the swing high anchored VWAP is starting to flatten out. And you can see here that we do have a gap above if we decided to actually break above this zone from here to here. So that area, this is this previous resistance zone that we actually did have some trouble getting through earlier in the week, and that's right around 178.50 all the way up to around 179.25. So we'd really want to see a close above 179.25 to get any type of potential traction to retest that swing high anchored VWAP and or fill that gap above, and or at least test the bottom of the gap. And the gap fills at 181.28, but the bottom of the gap starts around 180.4. And a lot of the time, these bottom or tops of gaps can act as support or resistance zones depending on where price is relative to the gap. So that is your daily candle on IWM. Weekly candle on IWM, we still have this SR flip. So if you're not familiar with an SR flip, you are going to get a quick rundown. For those that do know what an SR flip is, we're going to become real experts on this here after I talk about it quite often. Now, here's an SR flip. Same thing on the weekly chart for IWM. Previous support turned to resistance. So not only did you have support here back in October and then in December, you had to bounce off those points with pretty strong moves to the upside over the next couple weeks. But then we finally broke down through it in March, and we are now failing to break above this previous support zone, now acting as resistance. And you do also have a bear flag here that is forming. Remember, a bear flag is simply just a function of the trend, right? The trend is down, you have this huge candle, and then you have a flag. It's called a bear flag simply because the underlying trend pretty much since January has been down. We've been hitting lower highs, lower lows. So that's why we're calling it a bear flag. Bear flag doesn't insinuate that it's definitely going to continue down. Price action will determine that, but we'd really want to see a close above, at least next week, right around 183.50, which is the top of this zone, to invalidate this setup. But for now, bear flag, SR flip, definitely a reason for caution on the small caps and for the whole market in general. Now, going into crypto, we did have an ascending triangle here. We broke down through it a couple days ago, and we've pretty much just continued to hit new lows. Now, if we were to have a target zone, your swing low VWAP would simply be your target below. Right now, that's right around 26,775, give or take a few dollars. And remember, the especially Bitcoin and just the overall crypto markets do not respect levels perfectly. A lot of it, especially over the weekend, is due to a lack of liquidity. That's why you can have some of these huge wicks. So, use this as a target, but it's not, it's not guaranteed to be support. It's a level of interest, as Brian Shannon always says. Brian Shannon is really the godfather of the anchored VWAP. So, just use it as a level of interest below. Maybe you use that as your target. Maybe you don't. But that would be my at least downside target for the bear thesis, and then we'll reevaluate once this is tested. And as I mentioned, that's right around 26,775. And the reason that I look at Bitcoin and a few of these other names on the crypto side is because they're a great risk on, risk off proxy for the market. Not only that, but they have been front running the market, meaning that they're making the move first. And so the fact that Bitcoin and other crypto names are starting to pull back definitely could be a sign for the markets into next week that we may have some weakness. The bear case is starting to get some, a little more momentum, especially when we have those breaks and closes on the daily chart below those invalidation levels that we talked about before. So extremely ugly candle here on the weekly chart, but depending on the time frame you're looking at, we still have higher lows. We're still in an uptrend, at least in the short to medium term. So higher low, here's your capitulation point, higher low. We can move all the way down to 23 3.5 and still be at higher lows. We could move all the way down to 21,250 and still have higher lows. So just remember, it's all about perspective and the time frame you're looking at. If you're day trading or scalping, you're probably not even looking at the weekly candle. But if you want a general idea of how things look from a longer term perspective, definitely pull out the weekly candle. As we get close to the end of the month, pull out the monthly candle and see where we are. But for now, Bitcoin definitely not looking great, at least in the short term. And same thing for a lot of these. Ethereum, same thing. You can see here that we did mention last weekend in the video that we could have a potential SR flip. So that is essentially when you break above a previous area of resistance. In this case, it was the May to August of 2022 resistance. We broke above it, pulled back down, and now we're starting to break below it. So, you know, as I mentioned, crypto does not respect levels perfectly. So it does get a little hairy with crypto getting accuracy when you do have some of these crazy scam wicks that do happen in the markets, especially on Friday nights, Saturday nights, when there's not a lot of market participants in play. So for now, SR flip, we are starting to break down. So that's something to consider. Same thing here, just take the anchored VWAP from the swing low. And so if that was the case, then I would expect potentially even a move down anywhere from around 1770 to around 1790. So that is definitely your area to watch below into the weekend. Remember, I do these videos at least this weekend on Friday. Last weekend it was on Saturday. But you know, if you're watching crypto, the markets are going constantly. So you know, at least keep those levels in mind if you are watching this video into Saturday or Sunday. Now on the weekly chart, you'll see that we do have a kind of a bigger SR flip if you zoom out a lot. So previous support back in July of 21 finally broke down in June of 2022. We came back and retested that area and failed to break above it. That's back in August of 2022. And you can see the bottom of this zone has acted as resistance multiple times. And so for now, we're really just kind of pulling back and retesting this area. SR flip, at least on the weekly chart, could go all the way down to around 1700. And if we have a weekly close above that area, this SR flip is still validated. So remember, always have your invalidation levels. You can have an SR flip. Doesn't mean that you're definitely going to go up. It means that, okay, now I have a level that I can manage risk. I can say once price closes below this area, I'm out or the trade is over. And that's really what technical analysis is. It's not, it's not a crystal ball. It's there to kind of show levels and for you to look and see, okay, this is where I'm going to end my trade, or this is where I'm going to take profit if I get to that next level. So SR flip on Ethereum on a much bigger scale here, as you can see. Next one we'll go into is Solana. You can see here that we did have kind of a promising setup here, but once again, we knew that until price broke above or below this ascending triangle zone, that was going to be likely the direction that this takes, at least for the next few days, depending on if you broke above or below. In this case, we're starting to break down to the downside. Always remember, you can have a retest of that zone and then continuation down. That's your classic SR flip. And your swing low from December of 2022, that VWAP has acted as pretty crucial support a couple times. You did have a little bit of a fake and breakout down through here back in March, but you can see that back in on the 15th of March, on the 16th of March, on the 27th of March, this definitely made the market and definitely held price. So if we do continue down this area right around, let's call it, right around 1775 will be kind of your make or break area. But remember, you did have kind of a stop loss rate here, or just kind of an area where a lot of people got liquidated. So you can use this generally as kind of like a roadmap, but it's not gonna, price is never going to respect a level perfectly unless it's just a coincidence. So if you were looking at SOL into the weekend, wouldn't shock me to see a retest of around the 1950 to 1975 zone below. And this is where it gets fun, right? I still think SOL may be making some bigger moves here, at least in this case, until we close back below this trend zone. This is simply just a breakout and a retest of this resistance zone for now. So I had mentioned that I was even considering getting some SOL. It wouldn't be a big position. It would just be something that I get a little exposure to crypto. And that would simply be just kind of a retest of this zone. So you broke out. As I say almost every time I post a chart, always anticipate the SR flip. If you're breaking out of a diagonal zone, a horizontal zone, always anticipate that retest of where you broke out. And that's, at least for now, that's all that we're doing. And that's your classic SR flip. Now let's jump into some individual names here. We'll start with Apple. Apple's at a pretty crucial level here. So you can see here on the daily chart, we do have this trend zone still holding up, a pretty strong uptrend zone, but we're trading right at the bottom of the zone here. And so if we do break down, anytime we have a breakout or a breakdown, gaps are going to be my target. That's where price gravitates to. Price gravitates to areas of liquidity and areas that there's not a lot of liquidity. In this case, this gap is an area where you don't have any price action pretty much from... And if you do want to draw a gap and you want to see the top and the bottom of the gap, just go to coordinates here. You'll see the top of that area is 159.37, but the gap would actually fill at 158.49. So 158.49 is definitely the area that you want to watch below if we have a daily close below this zone next week. Now, if we continue up and break above these highs from earlier in the week, then your 171.31 would be your target above. Everyone's going to have a slightly different style. Some people are going to have their own special triggers. I'm just trying to show, what makes the most sense, just watching basic price action and using closes as a function of confirmation. So that is the daily view. If we look at the weekly view, definitely looks a little more ominous. You do have a test of this trend zone that we went over last week. Not only that, but you do have this ascending wedge here on the weekly chart. We're getting close to the apex. The apex of the wedge is simply just the kind of the end of it. So as price gets tighter and tighter here, as you can see over the last couple of weeks, we're getting closer and closer to that apex. So anytime you have price in an ascending wedge at a longer term resistance zone, it's worth noting maybe some caution is warranted here for sure. Going into the next one, we will go to Tesla. You can see here that we were pretty much being held up by this January low VWAP zone for quite some time. And I did have a question on how to kind of create this zone. So I just created a Bollinger Band multiplier of 0.1. So that's kind of creating this zone and capturing some of this price action that didn't respect the anchored VWAP perfectly. But you can see here, the anchored VWAP is actually the thicker line in the middle here. And we didn't break and close below on the daily chart this level until Thursday with earnings. So you can see here that we've got this inside bar on Friday. I would definitely say the bear thesis is intact, and you should definitely use the anchored VWAP from the January low as your status quo point, right? So the status quo essentially was prices holding this anchored VWAP multiple times over the last couple months. And then finally, when we broke below it, the bull thesis is invalidated because we broke below. But always remember, a retest and a pullback should be anticipated. So if we want to use this little highlighter here, move up, retest, pull back. Like that would essentially be your ideal move there. So, if you break below Thursday's low, there's a better chance that we're probably going to fill that gap a little quicker. But just use the highs and the lows as your triggers. If you break and close below that area, this highlighter is driving me crazy here. 1 second, let me delete that. Okay, so it's up to how you want to play this, or if you want to play it at all. But always anticipate the SR flip on any breakout or breakdown. I'll say that till the day I die. That's just that's a way to not get into chasing. Just chasing the downtrend. Well, a lot of the time you're getting a retest of where you broke out or broke down. Let's go to the weekly chart. You'll see here that pretty much the September 2022 pivot and the January 23 pivot here is where we want to anchor the VWAP. Last week, price was holding above both of these areas. Now we have a close below. Bear thesis is definitely intact until we can get a close back above this area on the weekly chart. Not too much to go over there on the weekly chart for Tesla. Next one we'll go over is NVDA. So NVIDIA, SR flip, you've got a breakdown here today on Friday below this ascending triangle support zone. And remember, any setup in the market, ascending triangle, falling wedge, a symmetrical triangle, all of these have slight statistical biases, meaning, in general, an ascending triangle does break to the upside more than it does to the downside, but that doesn't mean that it can't break to the downside. And you do the same thing, right? You break down, you retest, and then for now, this is an SR flip, and your target below would be this March 13th pivot VWAP, and that would be, at least in this case, into next week, right around 264.23. That's your exact price target. So if you ever are watching a video and you're seeing the anchored VWAP, it shows up right here. So anchored VWAP is blue. This blue area, if you can't see my cursor, is right there. So 264.23. So that's what we are kind of seeing here on the daily chart. Now, if you switch to the weekly chart, we are definitely still at this previous resistance zone and actually previous support zone back in December of 21, acted as resistance back in March of 22. Now we're right back at this area. We retested and almost broke above the top of this zone. And if we had a weekly close above that area, it would be a very strong signal that we may be breaking possibly to new all-time highs. We're not that far away from them. And so until we get a break and close above that zone, this is definitely in kind of a doldrum land, meaning there's not a lot going on. You can see here over the last 4 weeks, this thing's been range bound. So not a lot of price action. Longs and shorts are both feeling the pain here because there's just not direction. And so until we can get above, let's just call it 281, weekly close above 281. Definitely a reason for caution, especially after such a big move that we've had already. Now, as soon as we break and close above 281, then you can anticipate an SR flip. Breakout, retest that area, possibly all the way down to 270, the low 270s. Let's just call it around 272.25. And that's really the main areas to watch on NVIDIA for daily and weekly. We'll move on to Amazon here, and this is where we will go over the volume profile. So I had a couple of questions on the volume profile. Which one do I use? If you go to indicators and you just type in volume profile, visible range volume profile, you click on that, it's gonna pull this up. To me, I don't care about the buy side or the up volume or the down volume. Honestly, it means nothing to me. So the way that I make it, the way I just had it is I just change all these colors to gray. And so when you do that, make this gray, gray. Oops, that's a darker one. I guess that's even darker as well. And then this is where you change this value area volume to 100. So then it's capturing all of these areas. And apparently I didn't pick the same exact gray. So here, geez. Not sure why that's slightly different, but there you go. That's essentially how you're going to create it. And the measurement zone, essentially the area that we're measuring the volume, since it's the visible range, it's just measuring volume from here. So, if you want to anchor it from a pivot point, you just have to pull the pivot here to the first candle in the screen, and that's how you'll be able to accurately say, okay, this is the volume profile since the December 28th bottom. And so that's how it works. If you have any other questions, hopefully this definitely helped understand how it works a little better. If you want to add columns, right? So if we want to have, not columns, row size. If you want to have more rows, so it's more granular, so you can see, volume at smaller intervals, you do that. If you want to have them in larger intervals, just do it at 25. And that's how you'll be able to kind of change the volume. I personally don't use the point of control in here because we already know what the point of control is just looking at this biggest candle. So I just take that off as well. So uncheck point of control, and you have yourself a volume shelf using the volume profile. So we did have a huge launch off the volume shelf here on Friday. So a lot of the time, if price is holding a volume shelf, a lot of the time it can act as quote unquote a launch pad for price, kind of pushing off the volume shelf, and you can see here that your gap above would be your target, and that is at 108.88. Now on the weekly chart for Amazon, you can see here if we add the volume profile here, you can see same thing. You can see the shelf. If we want to pretty much measure the shelf since the start of the top of this symmetrical triangle, you would just kind of pull price over. Sometimes it can be a little bit of a pain, but you can see here volume is definitely supporting price, and you can see how price moved up off of this point of control in this secondary volume node. That's also pretty large. So where do we go from here? I mean, this is simply where you use horizontal levels. This previous wick here from January 30th, I think that was probably your earnings high. If I had to guess, I'm not exactly sure, but I think that's what it was. Right around 114. So 114 would definitely be the main area you want to close above on the weekly chart. And notice as well, that is exactly where you kind of have an SR flip as well. So previous support back in September of 2022. General consolidation area, you held it and then you broke down, and then you had some funky stuff going on around it. But then notice that this area acted as almost perfect resistance back in January. And so now moving up and going into the next couple weeks, if we did have upside, I would just call it 112 all the way up to around 114. So that's really how I create these zones. Next one and last one is Microsoft. And if you look at Microsoft here, let's just turn off the volume profile. We will just get rid of this one and add this one. You'll see there's quite a bit of volume supporting price here, and that's not shocking considering you've pretty much had range-bound price action for the last 3 weeks. So we can just turn that off. We don't really need it because we already know where a lot of that volume has occurred because there's how much volume or how much price action has happened here. So for now, same thing, SR flip, previous resistance back in March. We broke out in late March, and we've pretty much just been testing this area multiple times and pretty much going nowhere for the last 3 or so weeks. So until we break and close below the bottom of that zone, that's right at 281.14, then this is still technically a bull case scenario. Your upside gap fills at 296.28. Not sure why that is orange. I like to put those as yellow. And then if we break down and close below the bottom of this zone, then your gap below that fills pretty much from 276.14 to 278.41 would be your target below short term. And then if price gets there, that's where you reevaluate. And that's where you could even throw an anchored VWAP on here. And you'd see that anchored VWAP is right around where the gap starts. So if we did break that anchored VWAP and fill the gap, then that would go, as I mentioned, all the way down to around 276.14 or so. Let's just do it one more time. So that is, yes, 276.14. So anchored VWAP from this pivot here from March 13th, and then the gap below would be your zones to watch. So let's just call it 276 to 278 if we do get a close below this SR flip zone. That is all I have. Hopefully this video was helpful in not only understanding how I look at the markets, but also the market update going into the week ahead. I will be traveling the next 3 weeks, so we will not have a market update until the weekend of, I think it's May 19th. So there will be a few weeks. Hopefully this gave you a general roadmap into the next couple weeks since I won't be doing any videos, or I'll still be posting charts on Twitter, but won't be doing any videos. I just won't have access. So thank you all for watching. If you do enjoy these videos and these educational explanations, please like and subscribe. Really appreciate your support, and everybody have a great weekend.